All right, welcome back to the channel. I have a very important video planned for you guys. We're going to be talking about a special tool I feel like everyone should be using. There's different variations for the settings and the ways that you can use it. For example, deviations, rejection wicks, but today we're going to be talking about ranges and how to mark out the key levels, the key areas of that range, so you can potentially catch the true reversal or moves. Big moves, all that type of stuff. So let's get straight into the video. All right, so the tool we're going to be looking at today is called the Fib retracement. We're going to be looking at bullish and bearish legs within the market and where you can anticipate potential retests and retracements and continuation from there. We're going to be looking at OTE, discount, and premium of these legs, these ranges, and how understanding what these concepts are can be a massive benefit in your day-to-day trading. I think it's going to help a lot with context, with narrative, and just picking overall better quality setups. But before we dive into the good stuff, let's look at the tool, where you can find it, and the settings I'm using. So if you come to the far left of your screen, 3 columns down, and you go ahead and click the arrow right there, you're going to see Fib retracement. Go ahead and favorite that tool, and then you should see it pop up in your toolbar. Looking at the settings though really quick, so you guys can screenshot and do the same right here. But yeah, let's go ahead and get into the terms, what they mean. Like I said, we're gonna get live examples, all that good stuff. But yeah, so the 50% line on your fib is the equilibrium right here, 0.5. This is your 50% of the range, which is your equilibrium. You can look at equilibriums of fair values, all that type of stuff you guys probably know. In a bullish leg, anything below, so bullish leg, anything below the equilibrium is discounted prices of the range, aka cheaper prices. And above the equilibrium, 50% is going to be premium, expensive prices of this range. In a bearish leg, it's the opposite. So in a bearish leg, anything above the equilibrium is discount, and anything below is going to be premium. Now let's look at some general rules of what we just been talking about. So buy bullish legs and discount. Bullish leg, ideally you want to buy in discount, of course, better entry, and short bearish legs in discount as well. And if price retraces to this OTE, this green, I guess, zone, this is where I'm personally a lot more interested. Now we'll talk about OTE in just a second, but let's come back to discounted prices of the range. I want to tell you guys something really quick. So it's important to understand that as retail traders, you and I, we make up about 10 to 15, if not lower, percent of the market. With that being said, we are, existing with other parties that have a lot more influence on the market. People or individuals with high capital, institutions, banks, large funds, all that type of stuff. And these people, it's cliche, but they're truly, I guess, moving the market. And let me ask you a quick question. I'm gonna make it simple. We don't need to deepen it too much, but if you are looking to long, all right, let's say we clearly have higher draws in the market, prominent draws. The overall market wants to see higher prices. Let's say we're in a distribution phase of the month, the week, maybe even the day. So we pretty much have a general idea that the overall market wants to see higher prices. Now, when we see a move like this and we leave a sort of unbalanced range, if you will, and you see price start to have some volume kick in, start to flush lower, retest, we're not just going to pump. In this case, we're not just going to pump from nowhere. You're typically going to see price retrace to discounted prices of the range, giving large capital better entries. And this can be, like I was saying, this can be the difference of millions of dollars, so they're going to care a little bit more. It's going to take an act of patience, right? So you see price starting to flush lower, we see a little pullback here, price is coming back up, and you might think, oh, we swept liquidity, if we rebalance some type of fair value, we're gonna pump from here. I will take my chances 10 times out of 10 that price doesn't pump from here, and I'm gonna wait for a true discount of the range before looking for any type of long positions. Why? Because I understand who I'm trading with. It's important to at least try to think in the minds of these corporations, etc. And the concepts we're talking about is going to give you a little look into how these guys are thinking. So let's now talk about OTE more specifically. So when we're seeing price rebalance, retest a range, of course, I'm looking at discount, that's a given, but getting more specific, more tighter within that concept, I'm looking at OTE of the discount range. So if it's bearish, bullish, doesn't matter, OTE is always going to be in discount. And what does OTE stand for? It stands for optimal trade entry. So trades out of OTE are typically or always going to give you a better risk to reward, and it's pretty much the lowest price or the highest price can go within that retest without breaking the true trend of that current market. So if we're looking right here, we have a bullish trend. All right, so we have, of course, we get internal breaks of the structure, all that type of stuff, but the overall trend is bullish, right? We have a low. Let's say we're delivering outside of a higher time frame PDA, let's say like a daily imbalance. We're delivering outside of a daily imbalance. We have some strong draws above. We talked about this earlier, all that good stuff. So we know we probably want to see higher. The general market wants to see higher, good economy, all that type of stuff. Like I was saying, OTE is going to be that, I guess, last area zone I'm looking at for price to reverse from without breaking the potential trend of the market. So one more time, we have a low, high, higher low, higher high. Now, we don't know this is going to be a higher to low, but like I was saying, OTE is going to be that last zone I'm looking at for price to respect the structure. We can look at bearish as well. We have a high, we have a low, we have a potential lower high, and I'm looking for that lower high to be set in at OTE. Now, like I was saying earlier, we do see continuation from discount sometimes, but if we do push from discount, then we can look at OTE, and then, like I was saying, see potential continuation from there. Now, a quick thing to notice when it comes to OTE, discount in general, but more specifically OTE, when you have other confluences aligned with this zone, this box is going to boost the quality of those confluences. What do I mean by that? For example, you could have something like, I'll show you some examples on the live chart, but just to talk about it really quick, you can have some, you can have an example where there's a 4-hour change in the state aligned with OTE of the range. So that's going to be a previous bearish leg, right? We have a high within that leg. That we come and break, we put in the change in the state, and that level rests within OTE of the range. Now I'm going to be a little more interested with that CISD now that I've noticed that it's resting within OTE of the range. You'll see the same concept with, high time frame imbalances like 4-hour, 15-minute, 1-hour imbalance, stuff like that. You might see deviations as well. Like you could fib the manipulation leg, right? And you can get -2 to 2.5 within that OTE zone as well. So again, I'm not using the fib as a model. I'm using it as a tool, extra confidence in what I'm already looking to see type of thing. Now, before we get into like live examples, OTE of whatever range is a concept you're going to see on large scales and intra scales. I will show you that on the live chart, but of course this isn't the live chart, but you're going to see price retrace to discount of miniature legs, intra legs like this. Like, I know this is not the live chart, but you get the point. This is how the chart kind of looks, like that. Whoops, and even like this. All right. When we're in an overall bullish trend and we start to see that retracement to potentially OTE, you're gonna see an intra market maker buy model if in a bullish case outside of that. So you can look for entries here, wherever. But yeah, something to think about. Now let's hop into some live examples. Before we get into it, I'm gonna grab a quick cup of water, so give me a second. One more thing before we look at live examples, and I'll show you this when we look at live examples, but you'll see things, this is something to take notes on really quick. You'll see things like SMTs with the lows typically when we come to OTE. So when you do see that, that's just like a cherry on top type of thing, like just an extra boost of confidence if your bias was to see higher in this case. And those SMTs can be with, if this is a more broad scale of a range. Those S&Ps can be quarterly, right? They can be previous day high and low. It can be session highs, all that type of stuff. So when you do see that, it's just gonna, yeah, like I said, give you a little more confidence. But yeah, let's get into some live examples. All right, so we're gonna start with very simple examples, and then we'll move into some more advanced, you know, with aligning confluence, all that type of stuff, and we'll talk about how you can potentially take setups using this as an extra tool. But here you see a bullish range, right? Unbalanced. We do have small miniature retests, but still the range is unbalanced. So we know in order to continue higher, if that's what we want to do, price has to end up rebalancing this range. Now, if we're looking to rebalance this range, what am I looking at? First thing, discount, and then from there, OTE. So what we're gonna do is, for bullish, I should have said this earlier. For bullish, you're gonna fib from the low to the high. And for bearish, from the high to the low. But if we fib out low to the high of this range, right, look at discount, which is right here. We do see some type of reaction, but what does price do? Price ends up pulling lower to OTE. I'm not sure if we had an SMT. Might have had an SMT with this low right here. I should probably check. And then what do we see from there? Continuation back up to the highs. Market maker buy model. But let's get into some more advanced examples. This is just a quick, simple one for you guys to get the concepts. But let's look at the concepts even deeper with what I was saying before we came into live examples. You're gonna see it on, you know, more broader scales like this. You'll also see it on intra scales like this. All right, so we have a bearish leg. I'll just drag it to the eye. We have a bearish leg right here. And what does price do? Retraces right to OTE of this internal leg. So we have another example here. Okay. So yeah, so we see this leg right here, bearish leg, and we have not rebalanced this leg whatsoever yet. This is just miniature pullbacks, more consolidation, but consolidating our way down, leaving this bearish leg. So I'm going to fib it out from the high to the low. So when you might ask, well, when do you know to fib it out, right? Because you see price here start to kind of trend up, but we don't truly, you know, pull to any type of key level. Because if we look at the low here, right, price is not pulled at any key level. Now there isn't any like set time where you know to start drawing out the Fibonacci retracement. However, how I'm doing it is simply just waiting to see price kind of retrace, if that makes any freaking sense. So as I see price kind of have a more prominent move up, maybe S&P at the low or something, I'm gonna take the lowest point right here. So not this low, I'm gonna take the lowest point, right? And we see price pull to OTE, but let's take a quick kind of idea what I was talking about before with when you have other confluences align with OTE. Those confluences, the quality of that specific confluence can kind of boost because it's resting within a key area of a range. So on this specific example, I think we had, yeah, so we had a 4-hour order block right here. All right, so you can look at CE, equilibrium of that order block. We'll check it out really quick. Right here, drop down. All right, you can see right there, equilibrium CE of the order block is resting within OT of this range. So if you like using order blocks and you like looking at, you know, CE of order blocks, and you happen to see it's aligning with OTE, like I was saying earlier, this can kind of boost your confidence with, you know, this confidence potentially playing out. Excuse me, you can take the first confirmation right here, maybe you see an internal S&T, something like that, and you can go ahead and target the lows. All right, we're gonna look at a more advanced example now. All right, before we go to the next example, I have to show you guys this. But this is an example of the fib on a more broad scale, like I was talking about. So we have days of data, weeks of data. Yeah, weeks of data right here. And we have a huge bullish leg, right? This true bullish leg has not been rebalanced. But as you see price, let's say after this change in the state right here, you see price, all right, break structure, showing some bearish order flow. We potentially could see, you know, a rebalance of true discount of this range. So we're gonna go ahead and fib it out from the low to the high. And as you can see, discount right here, we get some type of reaction. That's typically what you'll see. You'll see sometimes a reaction, most times from discount of the range. Doesn't mean we're gonna get a true reversal from there. So I'll talk about how I kind of know which area, which zone will get the true, reversal from. But you can see price in this case mitigates OTE. I think we had SMT with this low. I'm not entirely sure. This was weeks ago, months ago. But you can see then we get a good delivery from OT. We never revisit those lows. The way I am looking at whether price will reverse from OT or discount is mainly looking at what confluences are lining with which level. So if we have more confluence around the 50%, the equilibrium, right, a whole lot of confluence, then I could potentially see, some sort of reversal, if not an internal reversal to some, session highs or session lows, whatever the case is. Or it could be a case where we have more confluence around OT and barely any confluence around the equilibrium. And this will be a case where I'm looking more heavily at OTE. And you'll typically see price pulls to OTE if that's the case. Or if the case is there's more confluence around the equilibrium, you'll see price sometimes get a true reversal from the 50%, the equilibrium. All right, so I was just looking at, this big bullish leg, right? And we looked, once again, how I talked about earlier, with there being more broad examples and then more intra examples within that broad example even. So we're looking at this, we saw, rejection from OTE of this range, but let's kind of zoom in here, right? Look at this intra market maker buy model. We have a leg right here, clearly unbalanced. Where does price pull to? OTE of this range. Boom, great, amazing. We have another unbalanced leg right here. All right, where does price pull to? OTE to the tick, or wicked it perfectly. So it's one of those things, again, it's one of those things where you don't have to deepen it too much. It takes 10 seconds to mark out. And then all you're doing now is still analyzing, looking for confluences. But if you happen to see some solid confluence within OTE around equilibrium, like I said, you're going to have a lot more confidence. This is going to help, like I was saying, with better quality setups. You're going to see, if you take your trades outside of OTE or discount, whatever, you're typically going to see your setups play a lot more than they probably were. That's what I saw when I started using this a while back. Instantly, my setups, my win rate instantly went up like 20-30%. And it was because I was trading heavily off of confluence. I would still look for SMTs like you guys. I would still look for, high time frame imbalances, get rebalance, all that type of stuff. But I wasn't really looking at discount of the range. I was essentially guessing where that retracement would potentially be to. But once I started using the fib on ranges, I had a lot more confidence. I can anticipate where those retracements would be a lot better simply using the settings that I have. Just another quick example, right? I have to show you guys because of how obvious this was. So we have a clear unbalanced range, right? No retest at all. Just consolidating, trending our way up. So if price truly wants to go up, and at this point you see price, starting to trickle down without taking out these highs. If price truly wants to continue up and take out these highs, complete the market maker buy model, we're seeing price has to retrace, right? So what I'm looking at is OT of this range. Hold on 1 second. Pull it right here. Jump to the 15-minute. Okay, so we're gonna fib out the range, and I'm gonna teach you guys something really quick. Boom, just like that. Where does price retrace to? OTE. All right, and when you're seeing this type of reaction from OTE, you can look for your entry based on how you like to enter your trades, whatever your situation is. Now, why did I draw it from this low? This is an important part. Why did I draw it from this low and not this low, right? Because essentially, if you're looking at this leg, this is the low of the leg. This is the high of the leg. Why did I not draw it from this low? Well, the reason being is price already rebalanced this, I guess, range higher. You see price. All right, we have this leg right here. Price rebalanced clearly. All right, take it from this low to this high. Price already rebalanced, OTE. So these for me are canceled. Whoops. These for me are canceled out. I'm not using them. I'm not looking at them. What I'm doing is I'm just taking now the new presented low to that high before, you know, we have any retracement, which is the highest highs right there. And that's how I'm fibbing it out. I'll show you a couple more examples on what I talked about because it could be a bit confusing. So this is a, I guess, decent example, more intra. But so right here, if I'm seeing this leg, right, and I'm seeing price start to trickle down, and I want to drop my fib to see where we could possibly retrace to, I'm going to take it from this low, right? I'm going to mark it out. What do we see? Price pulls right to OTE. And boom, great, amazing, we're all happy. Now, why did I drop from this low and not this low? Because essentially this is the low of that leg. Well, here's why. Very, very simple, right? Price already rebalanced this leg with this, you know, retracement lower. So for me, this leg, it whoops again. For me, this leg is now canceled out, and I'm gonna take the new presented low. Now let me show you an example when you don't need to cancel this out. See if I can find one. All right, I'm gonna cut it because this might take a minute. All right, so here's a decent example. We have a leg, we have a move up, and we see retracement here, but how do I know to keep this low as low, my fib, even though we have retracements here, we have retracements here, here, and wherever else? Excuse me. And here's the reason why. So if we're taking this low, right, because we had accumulation, then we have a new move, a new leg, we're taking this low, and we draw it to the high before the first retracement. Where do we retrace to on this retracement, right? Just this imbalance. Not true discount of this range. I'll draw it to the T, you guys can see. All right, so we never hit true discount of this range. So I'm keeping this low intact, you know, when I'm drawing my fib, and now I'm waiting for a new high to get implemented and then to see a true retracement. I'm just waiting. I'm being patient, right? I'm being patient. So we can use any one of these highs, no retracement here. We can use this high, no retracement, or true retracement there. Now we have this new high, and we see price start to really come for the lows, come for sell side. All right, so I'm keeping the same low, using this new high, waiting for price to retrace, see if we get a true retracement. What do? We get a true retracement to OTE. All right, we never push past it. We hold OT of the range, and then we get, you know, continuation from there back to the highs. Bro, I mean, it's literally everywhere, right? We can look at the chart, big examples, small examples. Look, right before this one, price is overextended, right? On the intra version, the intra scale, whatever you want to call it, smaller scale. And what do we see price retrace to? OTE. What about this range? All right, we have another leg, low to high. Where does price retrace to? Discount. It's not going to price. If price is retracing, especially in an extended leg, a broad leg, whatever you want to call it, if price is retracing, and we are truly bullish, like let's say we're delivering out of some, you know, we swept all this sell side, we're starting to see a strong push, strong reaction from there. We could see back to the highs, right? So we could see possible, you know, bullish price action. And again, price is retracing. It's not just going to reject and reverse from nowhere. We're most likely, the bare minimum, we're going to get a true reversal from discounted prices, if not OTE. So yeah, all right, every single retracement, we're hitting some type of level, whether it's discount, equilibrium, or OTE of the range. We can go into examples for days. I don't want to drag this video on. It's a very simple concept. You can see right here, intraleg, where do you trace to? OT. So very, very simple. I think you guys get the point. Whatever leg you're looking at, all right, it's something to be aware of. One more time, if you have confluences, let's say it comes down to a time where you're looking to take an entry and you see some confluences around OTE of a previous bearish leg. Right now, you're gonna have more confidence. All right, if you see an SMT within that, while we're mitigating OTE, previous internal high or something like that, and we get an SMT, even more confidence. But now you're not going to be guessing too much about where price will retrace to, and you'll have a bit more confidence. So I hope this video helped. If you do have any questions I didn't cover, you can let me know in the comments below. We will have more, of course, more educational content like this, going over concepts in depth and how you can use them, how you can incorporate them. Moving into the future, if you guys have any video suggestions, you can let us know on Instagram, DM me, market coordinator. Let us know in the comments, Discord, whatever the case is. But with that being said, I will catch you all in the next video. Everyone take care. I will see you guys. Yeah.